Good afternoon, traders. It's Simon at Kairos Capital Markets with the yearly review of pound yen. So this time a year ago, I outlined on the quarterly chart we had this bullish engulfing candle. I quite liked it. I've said I think it'll go long now, and I'll be targeting the longer term downward sloping trend line at the moment as initial target. So we actually had these four. Remember, this is the quarterly chart, guys. 1, 2, 3, 4. So I was pretty much right there. It has moved up nicely, not as fast as you expected to. Not much bullish sentiment at the moment. That's obviously because of Brexit, this, that, and the other. But I did feel this chart would go up, and it has moved up nicely over the past 12 months or so. So 130 was outlined, and I quite liked that. So let's now look down at the monthly chart and see what's happening here. At the moment, we haven't really got nothing really too special to look at here. I have a zone at I have a number at 148, but that's more of a weekly chart in all fairness level. It wasn't the greatest in the world. The EMA, monthly EMA, is not, it's in the way, but it's not being respected at all. It was respected here and here, but in this pattern at the moment it's not doing nothing. So for me personally, it's been bullish, it's moved up nicely, and it's been trending very well, it has. So I'm going to go to the daily level because this time, let me just show you a level here. So we saw price here. One of my words were, if you pull back to the daily 50 EMA and tested 140, it'd be really, really nice to see. Now, in fact, as we can tell, it never did that. It did break down to the downside, then pop back up afterwards. But I want to show you how key this 140 level's been several times now. So 140, it's tested 140 two other times after, which is absolutely beautiful to see. So the idea of noticing these levels before they happen, what I want you to understand is, the reason why we notice these levels, if you look at the first video, you'll see why I picked 140, and you see how it's been respected once, twice. You could say 3, you could even say 4 times there, and that's not the best respect. This one is here, this and this is here as well. Clean moves off of it up to the highs again. So at the moment now, we are here. We are in this zone here at the moment. Let's just highlight that for you nicely. There, that's a nice zone there. So in all fairness, what I'm looking for now is a clean break above here, like that, then come back down to test the zone. That's what I'm looking for another trade going long again. And these are ideal for what you need to do. There was a trading opportunity, as I told you guys, here somewhere. You could end off the daily here, no problem. Once it broke up there, you could have gone to the upside and held it there. Personally, myself, not the best trade in the world for risk to reward, because you actually, if you're going to hold for a long time, you may as well wait and buy at the bottom again if it goes to the bottom, because you're still bullish. But that's a story for another review later on in this year. So for the long-term trade, as I said, my ideal target is still this downward sloping trend line at the moment as initial target. So you see how we're grinding up here at the moment. I'm just going to do something like this, and we're looking really around the end of next year to get in around about my 168, 170 area to actually get the level where I think it would be next to test and where it would be rejecting it. So 170 would be roughly where we are. And this is a nice move upwards as it's happening now. So if you was going to trade, say for example, the quarterly chart, just to give you an example here, you could have done something really, really silly here. I say silly, but this is clever, but very basic. Not many people like basic stuff. They seem to think, you know, you should just do the hardest things possible. Notice how this chart here did almost test 0.5 Fibonacci. It did in the second one here. So you could have turned around and said, so the pullback there, I want to get in here, just on the close of this quarterly candle. You could have done that. Put your stop in a safe place somewhere. You know, you could put your stop around here, or even as stupid as high, big as that. And you could take a big trade in that, for example, held it for quite some time. So that's only a 2.5% trade. But if you put a big amount of risk in this, you could say, well, I can afford to put a 5% risk in here because some people put 10% risk in, but because it's such a huge triangle, such a huge pip stop loss, you know, you could trade that and still make like 15-20% in a year. You could almost. So, you know, art of trading is always seeing opportunity and understanding where you can get in, where you get out, where you're right and where you're wrong. Every chart does the same. This chart does take 3 months to form a candle, nothing more than that. But people think it's too long, but they don't understand that, you know, earning 20% a year is actually a really good thing in trading. If you don't understand nothing, earn that is really, really good. Okay, guys. So like I said, so downward sloping triangle is still my initial take profit for this, and that's what I'm looking for, long-term trade on the pound yen. Alright guys, Happy New Year and speak to you in 2018.